I just bought above this bar for a swing. We have a bear leg in a trading range. We had a bear flag breakout, but we kept getting above the prior lows and ended up getting 3 pushes up here. So this is the third push up. Spike and channel. I think it's reasonable to expect a target of this high, or perhaps if it's spike and channel, it could be 1, 2, 3, 4, and we could get up there. But I think the most reasonable one is up here. And it could also be the entire channel spike and channel starting up here, but that would probably require many pullbacks. So I think the most reasonable target for me is this high. And I think it's a reasonable entry after 3 pushes here in a micro wedge. Just got stopped out there, but I do think that was an okay entry to take. I lost $10. Yeah, I thought that was reasonable. If it reverses up one more time, then I might take it, but if it keeps failing here, we might get a measure move down of some kind. So it looks like this was a stop placement issue. It crossed my mind that because this bear bar was so strong, it might need a second leg down, but we had already had 2 pretty good bull bars. This is a good size bull bar, tail on top, but a decent size reversal, and this was a really good bull bar. So I was thinking if this fails, we might get a measured move down, so I didn't want to have a stop too wide. I mean, I could have left a little bit of room in case it wanted a second leg down from this bar, but I just thought with the 3 pushes and the 2 decent signal bars, I wasn't willing to have a wider stop. So I guess I paid for it here because it looks like it's doing the move that I was anticipating, but just after stopping me out. I guess I could have used like a money stop down here and give it a little bit of room for a small second leg. I also could have entered as it reversed back up, but I thought about it at the time. But that was a situation where if I got stopped out again, I would really regret doing that without a signal bar. So I decided to let it go, but it looks like it's a pretty good reversal up. So if this is a bear leg in a trading range, then this might be a bull leg for a couple hours. So there might be another opportunity to get back in. So if we get a couple bull bars and then pull back for a good bull flag, then I'll probably re-enter. Okay, so I meant to buy above this inside bar, but I bought with a limit order. I think I bought at the market. So I just exited that position right away and then placed my buy stop order above this buy signal. I'm seeing it as a second entry buy. This is the first entry. I pulled back. So we triggered above the first buy signal. We pulled back and created the second one. It is a little bit of a tight trading range. One sec. All right, yeah, so it is a little bit of a tight trading range, but the context is huge climax here, really strong reversal on this bar. I thought it might have even been reasonable to buy above there, but I wanted to see a second entry. And we pulled back here and then got a second entry on this bar, so I think that's reasonable for a test up. I didn't want to use a wide stop for this one because we already had the second entry buy here, but I do think there's probably buyers down here. But because we already got the second entry, I'm just going to buy above there, put my stop below here, and see if we can get up to the sell climax high. Looking to take off half at 50 cents, and the other half at the sell climax high. I just took off half near my entry. It wasn't looking as strong as I'd like it to look on a climax reversal. Tail on top of the entry bar, and then just hesitating, going sideways here. So that's not really what I like to see if I'm buying after a climax. So I thought it better to just mitigate my risk there, get out of half, and then see if the other half can go test the high of the sell climax. And if this bar doesn't close on its high, the current bar, I might just exit the whole thing, but it does look like it's accelerating up now. So if it can close above the prior bar and close on its high, I'll stay in. But if it can't do that, then I might exit. So I did close on its high and above the prior bar, so I'll just stay in, see if we can get up to my target. I'm going to exit on the close of this bar. So just got out there. It was stalling at 330, whole number, and it was just below my entry, 10 cents below my entry, so I thought I'd just exit at the close there. So all out, made about $4 on it. Obviously, it would have been a bigger win if I hadn't exited here, the 5 shares, but it just wasn't looking as strong as I wanted it to, so I'm okay with that. And looks like this exit was okay. Probably gonna have buyers somewhere in here, but usually if it's approaching my target and hangs around below it, I just exit on the close of the bar, because sometimes that means it has to pull back a little bit first. So yeah, I think it was an okay read. We had trading range price action early in the day, and we started to get into a really small pullback bear trend, but still overall in a bear channel. And we finally got this blow off Climax. So I thought it was a Climax for that reason. Similar to here, this is March 19th, 2018. Strong bear trend for the day. But here we start to get buying pressure, so potentially an end to the bear trend, and then one final blow off here. And so that's kind of what I was looking for today. We had the buy signal here, but after the Climax, possibly getting a second leg down. So I thought it was okay to buy here, but I'd have to use a wide stop, and I didn't want to today. So I thought it'd be better to just let this go if it goes, but I want to wait for a second entry. And so instead of getting a new low here and a second entry like we got on March 19th, we just got the second entry here. So breakout, pullback, or just trigger the buy, pullback, and then second entry buy. So I bought that, saw it below, and looking for a test of the sell Climax high. Here's another example of what I did today. So here, the market rallied on this bar, and it started to form a tail right below the sell Climax high. And so this is kind of what I was talking about, that I like to just exit at the close of the bar if it hovers below my target and it doesn't quite get there on that same bar. I just like to sell the close because there might be some resistance there. I don't know if that's right, but that's just how I feel comfortable trading it. So that's what I did today. Here, this bar was hovering below 330 for a minute or two, right below my target. So I thought maybe 330 is the right target, and just sold the close and exited at the close of that bar.